Alex, welcome to F.A.C.E. It's a pleasure to meet you.
Hey, Dale, thanks for having me on.
It's great to have you, Alex. Have you been on Zoom before? Because the green button is your screen share if you want to do that.
All right, let's see.
Unless you just wanted to do a talking heads thing,
we could try that too.
Okay.
Bore your listeners.
No, you know what? I want to see maybe you could show us some of your setups and things that you look at. But can we go into a time machine and take it back to how you got involved in trading and the industry and maybe what you were doing before, and a little bit about your journey from point A to what you're doing now at Macro Ops?
Sure. Yeah. Okay. Well, so I took a little bit of a circuitous route to get into markets and trading. I started off. I joined the Marine Corps about a month after 9/11, right when I turned 18 years old. I went into the infantry, did 4 years active duty, did a number of tours there. I'd been introduced to the markets in my early teenage years from my dad. He's a CPA, used to work for a number of hedge funds and stuff. And so I got my exposure that way, traded stocks when I was, 13, 14 during the 90s. But I was never, I enjoyed it, but I never got the bug or anything. But after the Marine Corps, my original plan, I was going to go to college. I was going to get a degree, come back as an officer, go to flight school, become a test pilot, and then apply to NASA. My dream, my entire life was, become an astronaut.
Right.
I ended up getting an eye injury in the Marine Corps, so that basically cut out flying planes for me. So then after that, I did a number of things. I ended up finishing college, studied a little bit of finance there, but I thought it was just a bunch of gobbledygook. I didn't really like the stuff that they taught. I was always trading a little bit on the side. Did odd jobs like bodyguarding and for Hollywood celebrities. I went back into the military, this time in the Army National Guard part-time. I worked military intelligence for a while. And I was just kind of doing that for a few years, trading a little bit. And then it was like around 2011, 2012, I started to get a little bit more serious. And I wanted to make a bankroll. So I took a contract over in Afghanistan doing military intelligence, like human intelligence collection, interrogation type stuff. And it paid really well. So I went over, spent a year in Helmand, operating out of there, flying around the country.
Oh, yes, I recall your journey now.
What's that?
We've talked before, haven't we?
No.
There's another guy I have to introduce you to. He did the same thing, and I think he was, went for the bankroll, and I think he was involved in, watching the prisoners, and he went into marijuana. Pink sheet type marijuana, poured all his money that he was making as in the Corps from, while he was overseas into marijuana stocks before they became fashionable. And it's and I'm listening to your story. I go, I've interviewed a lot of people. I go, God, I've heard this before. So, okay. So I'm thinking, okay, see, I need
out there.
I need our viewers here to, anyway, his name's Alex Sunderland, one of our attendees is telling me.
Alex Sunderland.
Anyway.
I don't know the name.
All right, he's on Twitter too, but yeah, you guys, I don't know, you guys had the same strategy, go risk your life to put together a war chest to trade.
Yeah, well, I mean, when you're all your professional career just being a grunt, you only have so many means to make a bankroll. So
I hate to jump in. Hey, Alex, this is Blake. How are you?
Hey, Blake, how you doing, man?
Nice to meet you. I was actually just listening to your story. And ironically, I just had visited a friend of mine that I hadn't seen in 28 years. That we were in Guam. Well, we were both Marines. We were grunts in 3rd Battalion, 9th Marines before it was disbanded. We spent 1990 through 94 together in, let's see, Guam, Japan, Indonesia, Malaysia, Somalia, and then California. So it's nice to meet another, devil dog. So
Yeah, right on, man. Yeah, you're an old salt dog, so you got all the good tours back in the day.
yeah,
Nice to meet you.
funny thing is, I was selected for Scout Sniper Platoon about a year and a quarter before I was getting out, and they're like, "Yeah, we need another 4 years from you," and I'm like, "Yeah, that's not going to happen." So, I bowed out, after the first day because they wanted another 4 years from me, and I said, "No, I can't do that." But
let me ask both of you guys
yeah,
a question. All right, because I've spoke to John Netto, former Marine. Okay, I mean, you don't know how many former Marines have gone into the trading business. Could it be kind of that you enjoy the adrenaline? You guys are kind of like adrenaline junkies, and even though you're not risking limb and everything else in the markets, that there's danger out there and there's strategy, and that it appeals to certain military people.
I don't know about I don't know about that, but I'm going to let Alex go on with the interview. But I would say, for me, and I'm sure he could probably confirm this. I was just young, dumb, and full of
yeah.
Oh, Alex, you finish it. All right, you guys have a good one.
Yeah, nice meeting you, brother.
All right,
nice meeting you.
All right, so Alex, after you made the bankroll, and you were trading stocks when you were a teenager, who taught you how to trade? Did you have any influences or books, or are you pretty much self-taught?
Yeah, so it's a little bit of everything. I mean, so like when I went over to do my contracting gig in Afghanistan, I literally brought with me a trunk, like a 100-pound trunk of just 50 trading books. And so I work 12-hour days, 7 days a week, and I go back to my little hut and just read, study markets, trade, for like late into the night. That was kind of what I did for a year. And when I got back, I just knew I wanted to trade. I didn't have any formal finance, background and stuff. I learned enough to be dangerous in markets, to myself, not to anybody else. And so I just sought out mentors, and luckily I'm very fortunate that a bunch of people have helped me out along the way. And so I got connected with this guy in Malibu. He's a former IB prop trader, and he's real successful. And then he kind of retired and was trading money for a small group of clients and stuff. And so he basically brought me in. I was able to just kind of sit at his desk and watch over his shoulder, and he just kind of taught me market structure and just the ins and outs of risk management and stuff like that. And so I did that for close to a year, and then I ended up going to work. It's an old publication, a trading publication. It's no longer in existence, but it's called Mercenary Trader, and I used to really like it back in the day. Well, I went to work there for a little bit, which was interesting. And I met some other people. I ended up going and working for the small macro fund after that for a little while, just kind of as an analyst. And then this was, 2014, 2015. I'd learned, a decent amount. I'd gone around knocking on a bunch of doors at hedge funds and stuff, just, seeing if I could get a job. But I ended up getting a job offer at a large East Coast hedge fund. It was Bridgewater, and I was in the process of moving out there, moving my things out to start. And I just kind of got cold feet at the last minute because I'd come all this way. And by this time I'd, learned the game. I was consistently profitable in trading, and I just kind of wanted to do my own thing. And I was really excited to go work at, that hedge fund because I was a big fan of their work and stuff, but it's also a big organization. I was going to be in a junior management role. So essentially I was going to be running a lot of meetings, which is my exact nightmare. And I didn't want to do that. I like kind of doing my own things. And so I called up two of my older buddies, and I just asked them if they wanted to start a blog. And
when did you start Macro Ops?
And put out research and just kind of see what happens. And they agreed, thankfully. And so, we started doing that, almost 6 years ago now. So we've been running Macro Ops.
Nice.
And we do, just research for professional, institutional, and kind of serious retail traders. We recently launched a hedge fund, Foundation Capital, earlier this year. And so, yeah, we've just been kind of doing that. But
okay, I went to your website and says you're not your normal newsletter.
yeah.
So why so what makes you so special, Alex?
Well, my mom always told me I was special, and I always believed it. But
I got that validation too. Yeah. So we've been deluded our whole life because
yeah,
mothers think
definitely.
all their sons are always special. But
Yeah,
anyway,
no doubt
yeah.
about
So
it.
go ahead.
Oh, yeah. Well, I was just going to say,
Bushy,
so I mean,
bullish, or
the
bearish?
idea with macro, so what we wanted to do is, there was just a lot of just in our minds, this poor quality research where it's just playing to people's biases, sensationalism, and stuff like that, and it wasn't true market analysis, and more importantly, like didn't talk about the stuff that really mattered. And this was like 5-6 years ago, so that's like, uh, prehistory days of the internet. It feels like, because the space has changed so much since then.
It's saturated.
And so, yeah, but like we started the site where we focused mostly on, like, risk management, building systems, trade setups, how to think about things probabilistically instead of creating these, giant narratives that sound really great and make you sound smart, but or in the end, just kind of a form of mental masturbation, not a form of profitable trading.
Okay, so you have USDMX up here. Do you trade it?
Yeah. So we dabble kind of in everything. We have a number of strategies that we run, like profit centers. So I have a team with me. We have a value guy who focuses purely on finding value plays. We have two quants, one that focuses mainly in the options vol space, and another one that does purely commodities. And I kind of sit around and play in everything. I like playing in the FX markets. I like playing in futures and stuff. And so
what's on your radar now, Alex?
Yeah,
we've had about 7% pullback, 8% pullback. Tech, mega cap tech has gotten slammed. I mean, Amazon topped a month ago. Is this enough of a pullback in the market before we launch again? Or are you looking for something deeper?
Right. So like a quick 2-minute rundown of kind of how I'm thinking about stuff right now. So here's our growth composite model. It just looks at a number of leading growth indicators.
Okay, we're still seeing the peso.
You're still seeing the peso? I don't know how.
And do you believe that the peso is a good risk off instrument? Because we recently had that nice pop in the peso, US dollar MEX.
We're currently long the US dollar peso, and it's forming long-term kind of fulcrum bottom potentially. So we have a small position we're going to look to add on upside follow through. Just playing a general risk off, which is what we've been positioning for the last 2 weeks in broader markets. I'm fairly bullish on the dollar looking out, kind of going into the next 2-3 months. At least that's where my bias is. So I'm looking for opportunities to get long.
Okay, you have a view on
on
the SPOOs.
How do I change the
hit stop share, and then you're probably going to have to a new share. There you go. How old are you, Alex?
37.
Yeah, you sound like a young guy.
What's that?
You sound young.
Oh, thank you.
Well, I mean, you're not as young as you used to be. None of us. I'm not for sure.
So one of the things that we're looking at is the macro growth composite. Just one of our indicators that looks at leading indicators. So
cool. All right. So you have your own proprietary type indicator here.
Yeah. This is but luckily we have people on my team that are much smarter than I, and they do all this work. And so this kind of just gives us, we're always trying to identify what regime we're in, from an economic standpoint, from a market standpoint. And so we start at the top, and then we kind of drill down, doing concentric circles to kind of build context out. And so the macro growth composite is just a composite number of leading growth indicators that shows that we've been in kind of an expansion phase recovery for the last, year, 18 months. But we're recently turned over and now we're moving into what's going to be kind of a mix between a slowdown and an expansion, because we're coming from high levels of growth, but that
Right.
delta on that growth is falling. And that we're also moving off the back of these large liquidity impulses, which are turning negative, in the next month or two, and that's going to start to really draw markets looking out over the next year or so. So here's the rest of our dashboard, and this is like a number of things we look at, but we have a composite indicator to just kind of measure trend risk, which we call trend fragility. And so we're just looking at positioning and sentiment, volatility relative to price action in the general market.
That's what's in that red indicator, all of those measurements.
This is that indicator right there.
It almost looks like an RSI.
Yeah, it's been elevated for the last 2 months, and so that just tells us okay, it doesn't mean the trend has to end. It just means that it's becoming more susceptible to larger pullbacks. And we had a number of things trigger in the last 2 weeks, like we saw this, a giant thrust of aggregate fund flows. So you saw a lot of people pile into broader equities, and this measures the fund flows for all the major U.S. indices, and we saw that in January 2020,
prior to COVID,
and again in January 2018. And so you kind of see that stuff before we get a bout of risk off. In addition, we've been in 7 months of consecutive bull bars in the S&P. So a big form of analysis that we do is Al Brooks. He had a big influence on me early in my trading career. So I don't know if you're familiar with him, but
what's his name?
Al Brooks.
Al Brooks.
Yeah, Al Brooks. He's an OG. He's been in the game for 30 years, and he runs his own trading service, and he teaches kind of bar by bar analysis, and I found it really useful, and so it makes up a core component of how I kind of do technical analysis. Okay. But anyway, so yeah, so we turned bearish about a week and a half ago.
After that 61.8% retrace.
Yep.
Off the first break. Okay.
Yeah, off that first break. Because what we try to do is just we don't try to be too smart. We're more of a mostly we do a mix of stuff. We do a lot of long-term positioning. And then we do short-term swing trading, where we run these systems that we manually backtest in a number of different markets. And so you could see this is kind of how I look at a chart. We have the SQN, which is the system quality number that Van Tharp created a while back, and it's to measure the quality of a system you build, but it can also be applied to markets, and it's a great indicator for statistically breaking down different market regimes. So I can look at this. There's 5 regimes. The light green tells you it's a bull quiet. That just means in a bull quiet, it's the trend is up. The best looking sell setups tend to fail. They tend to get bought. It's very frustrating for the bears. When you move into what you see right here, the dark green, that's a bull volatile. That's where daily volatility kind of spikes, which just shows that the trend's getting a little bit more frenzied. And that's usually when markets start to peak, which you can kind of see is exactly what happened here. And so I use them. We have different systems and different setups that we run depending on which market regime we're in. And we just, we apply that across the board and into our broader portfolio. So, looking at the market right now, we've been in an uptrend for 7 consecutive bull bars. And so this is we saw our first bearish close last month in September. And typically when you see that, you see 1 to 3 months of, a pullback 10 to 20%, or at least an extended sideways consolidation for 2 to 3 months. And so I think that's what we're in here. But there's a number of things that, we're looking at that are a little bit different this time. High yield spreads haven't, blown out a ton. There's still not a ton of fear, which, could go different ways. You could say, okay, well, this sell-off likely has a little bit more to go. Small caps, I think is the most important chart to watch right now. They've been in a sideways tight compression range for.
You're looking for an upside breakout? with the way they're acting now?
Yeah, I think, well, I think we just have to pay attention, because there's, I mean, that's a big question to me right now. Like, are we entering a period of extended risk off, where we're going to see kind of a positioning washout, or are we just seeing like a rotation back into kind of cyclicals, with the rising yields and stuff like that? Because
Yeah.
growth is slowing, but growth is still going to be very elevated over the next, 12, 18 months. But I also think the macro game has changed significantly in the last month or so with the recent Fed meeting. I thought was surprisingly hawkish. I think it shows that Powell and the FOMC are starting to get a little bit scared about inflation. I don't think they actually think that it's transitory now at this point. And so they're getting a little bit spooked. And so I think that their whole, fate, average inflation targeting policies kind of been put back to the side. And so, a rate hike is now on the table for the end of next year. Quantitative tightening is going to end sooner than previously thought. And so it just seems like their messaging has changed in a very important way, and which it wouldn't matter that much because, potential rate hikes are still a long ways off. But when, asset valuations are so elevated, that type of signaling does matter because there's a lot of duration on this market, right? So
does the duress in China factor into your thinking right now, Alex?
Yeah, it does. I think Evergrande, I don't think it is a systemic, layman moment or anything like that. I think the CCP will manage, everything, and I think, because their number one priority is just stability, right? They just want to maintain.
You know what I was thinking, Alex?
Yeah.
The Winter Olympics are there this year, right? In Beijing.
Yeah.
So I mean, I can't see Xi letting things really unravel before the Olympics.
Yeah,
Because,
exactly.
F.A.C.E.
I don't think that's going to happen.
Yeah.
For China stuff.
When are they? Do you know when is it February or?
No, I don't know the exact dates.
Yeah, but
Yeah,
I was
don't
just,
know the exact
because
dates
I
when the
do
Winter
think
Olympics
what's
start.
happening there longer term is a major problem for, geo and financial. But I think that he'll do what, he'll come in and, they'll ease and they'll manage certain things so that when the world is watching Beijing, they're not in the middle of a credit crisis, or at least it won't look like they are.
Yeah, I think with China, I think they're at a crossroads, right? Because their answer to every issue that they've had is just more leveraging. And that's because of this very particular system that they've been in, that Michael Pettis, the economist, Chinese focused economist, has done a lot of great work on. But that obviously isn't sustainable. Now they're, debt to GDP levels are arguably the highest in history out of any country. And luckily that's, mostly yuan-based debt, but still it's pervasive. There's, a lot of worthless loans out there in the Chinese market. So they're going to have to start to manage it. And Xi is signaled that that's a priority. He wants to, reorient growth back towards more, or for the first time, towards the consumer, which means redirecting a lot more of the national income towards the Chinese consumer. So, that means the large corporations and SEOs are going to get less of that GDP pie. But Chinese consumers are also very leveraged too. And so I think what that's going to translate to over the next 5-10 years is that they're going to have to accept a much lower growth rate, and something more along the lines of what we see regularly in the developed markets, which is going to be 1 to 3%.
They have more practice with austerity than Americans do.
Yeah.
I just want to cover one more area, and then I want you to show people your website and how they could follow you. A quick view on commodities, agricultural. We know energy's been doing well. Are you a believer in a commodity super cycle, or we're just in a cyclical bull market in commodities? that's being accentuated by supply chain constraints?
Yeah, so I think it's actually a mix of both. I think we likely are at the beginning of a longer term commodity super cycle, if you want to call it that. I do think some of this stuff is run little far too fast, and a lot of that's driven by these supply issues, which much of that is going to get resolved over the next year or so.
Okay.
But I think the energy space is extremely interesting. We've just had a dearth of capex, for the last 6-7
Yeah.
years there.
Yeah.
And so it's funny that the entire ESG movement is basically created this own monster that's going to come back and bite them in the butt. Because you're not going to have the supplies to meet demand at all, looking out over the next 2, 3, 4, 5 years. A lot of
You have
stuff.
any favorites there? I mean, a lot of people, like Reddit was talking about, although they've learned the lesson, they can't short squeeze a global commodity market like they can one issue of stock. So they're talking $100 silver. A lot of people really like silver. I like the grains because the Fed can't print corn. What do you think?
Yeah. I don't have a strong opinion on the grains right now. I mean, we're short soybeans. I just run our swing trading systems in those names. So I mean, we're in and out within usually a week or two.
Got it. Yeah.
But I do like looking at the energy space. We're long, deep out of the money calls on names like Comstock Resources, which we've been, we bought a couple months ago, so that's been a good name for us. Things like, Paneer is another one that we're very bullish on. It's just an oil and gas E&P. Vista Oil and Gas is another one that we really like. That's based out of Argentina and trades on the Mexican exchange. They have some amazing, resources and stuff like that. And I think I could pull up that chart too.
You watch everything.
Yeah. So, I mean, I think the energy space is going to be really interesting. And we're, I think we're bullish on the dollar over the short to intermediate term, looking out in the next couple of months. But I eventually think the US has more policy space to really juice things when they get nasty, versus much of the rest of the world like Europe. And so I think that's going to eventually translate into a resumption or really a true start to a longer term bearish dollar trend.
Okay.
Which, obviously will be good for the commodity space.
I'm really glad I reached out to you on Twitter, Alex, and interesting interview. You're a fascinating guy. And, I can tell after talking to someone for 5 minutes that they know. So what's the best way for people that are watching us live right now and see the video later to follow you, get a hold of you, maybe participate with you in your work?
Sure. Yeah. Well, so our website is just macroops.com, macro-ops.com, or you can find me at Twitter, Alex Barrow at macroops. So, follow me, shoot me a DM. My DMs are open. Sign up. We do a free weekly market newsletter. So yeah, you can find me there. It was a real pleasure talking to you, Dale.
Yeah, I'm. You're now my trading warrior brother. How about that?
Right on.
Yeah, you're a warrior, and I could tell. And I wish you nothing but a great fall investing, scalping, trading season. And if you're open to it, we're going to do this again, Alex. What do you think?
Absolutely. Thank you, Dylan. Right back at you. I appreciate it.
All right, Alex Barrow, everybody. So you can follow him on Twitter at MacroOps, website of the same name. And remember, everyone, hope you had a good turnaround Tuesday, and don't just count your pips, count your blessings. Thanks again, Alex, for being here. Glad that our paths crossed.
Same, Dale. Thanks. Cheers. Have a good one.
All right, everyone. All right, that's a wrap, everyone. You could join the team in 12 minutes on the morning edge. Make sure you have shaved. and that your morning edge was used. Everyone's thanking you, and Alex, and I thank you too, and you're welcome, everyone. Monica, Laura, Jades, everyone. Have a great day. Good hunting. Adios.